Self-employed taxes. You know what helps to make doing your self-employed tax return go a little more smoothly? It's throwing on a good jam. Listen, whether you are using TurboTax, TaxAct, H&R Block, or if you're working with a CPA, my goal with all you self-employed people in this video is to walk you through your self-employed tax return, give you some self-employed tax return tips, provide you with a tax return checklist for you to use each year, and discuss many of the tax return documents you need so you can e-file your self-employed income tax return in a neat and organized fashion, and so you can focus more on growing your business instead of being bogged down with something as boring as taxes. All right, let's get to work. What's up, guys? I'm K. Scholl. Welcome to another financial awareness video. This is a follow-up video to my other one about 10 self-employed tax deductions and tax credits. So if you haven't seen that one yet, I'll link it in the description below. You'll want to watch this video all the way through because, well, I don't really put a lot of fluff in my videos. They are as short as they need to be. So add this to your liked videos if you'll have to come back to it later by tapping the like button. Also, this video is packed full of information, so please feel welcome to use the chapter links and skip ahead if you like. I figured that would help you in the event you had to come back and rewatch parts of this video. Nope, I'm not a CPA and I don't need anything from you. I'm just a guy on the internet trying to help out, and this video is for educational and entertainment purposes only. However, I was a financial advisor for over 8 years and have my Series 6, 63, 65, and have coached a lot of people about how to manage their tax brackets and other personal financial decisions. And I usually post financial planning videos each week. Would love for you to subscribe. Okay, with all that out of the way, my first self-employed tax return tip for you is to help you visualize these documents. Most of you self-employed individuals watching this video will be filing your taxes through Form 1040. Think of this as the mothership master document, and there will be several other forms that have to be documented and turned in as supporting evidence for what you put on your Form 1040. And those documents will have supporting documents of their own, likely followed by receipts and other documentation you'll want to keep record of in the event you ever get audited. Real quick, I'd like to make two different distinctions: people that are W-2 employees and people that receive 1099 income. W-2 people receive, well, a W-2 sometime around the middle of January through February, which shows their total gross income, retirement contributions, the taxes they withheld, and the taxes their employer paid. Some employers even upload it to your HR employee website sometime around early January. So if you don't want to wait for it to come in the mail, then you might want to check there first if you happen to be a W-2 person with some 1099 side hustle income watching this video. 1099 and other self-employed people have to do many more calculations, which is probably you if you clicked on this video. W-2 people are not able to take advantage of many of the business tax deductions that you are able to as somebody who is self-employed. Generally speaking, here's how it works. You got your self-employed business where you make your money from. That's called your gross business revenue. And then you subtract out your business expenses, which are the things you had to purchase or spend money on in order to earn the money you made, which will allow you to arrive at your net business income. Now, we are not at your final taxable income just yet, but you should know that in addition to your federal tax brackets, you also have a self-employment tax of 15.3%. W-2 people have the exact same federal tax brackets as you and the same 15.3%. However, that 15.3% employment tax will be split between them and their employer. So their employer will be paying half of it, and they have the added benefit of their half being taken out of every paycheck. Now, as a self-employed individual or someone who's W-2 with some side hustle income coming in, you're only going to pay this 15.3% full self-employment tax based on, well, your self-employment income and not your W-2 income. So this 15.3% self-employment tax is not an additional tax. Like I said, you're just on the hook for the full 15.3%. Furthermore, as your 1099 income rolls in, this money is not being taken out of that revenue. So you have to make sure that you're saving for your self-employment tax in addition to saving for your federal income tax bracket. Which is why so many of us, you and I, seek out all the best ways to reduce our taxable income. In another one of my videos, I go over the difference and compare the solo 401k versus SEP IRA. And in that video, I go over a detailed comparison about the self-employment tax. So we won't be going into that level of detail in this video, and I just like to encourage you to check that one out whenever you have a moment. Okay, this might be a section of the video you'll have to watch once or twice in order to grasp it. So please be patient and take your time. Here we go. At the very bottom of your Schedule C, the form instructs you to put your Schedule C line 31 profit on your Schedule 1 for your Form 1040 and on your Schedule SE line 2 for your self-employment tax calculation. As we can see from your Schedule 1, line 3, your Schedule C profit goes here, and you are then able to make adjustments to your income depending on your situation. Some common adjustments would be health savings account deductions, self-employed SEP, simple or solo 401k contributions, and possibly a tax-deductible traditional IRA contribution if you fall within the income limitations. This final number then flows over to your 1040 on line 10A. And as you continue to fill out this form, you'll arrive at your taxable income. But we're not done quite yet, because as you follow this over to page 2, you'll see that there are several tax credits that might pertain to you if you are self-employed, such as the sick and family leave tax credit and possibly the child tax credit and dependent care child tax credit, depending on your situation. Are you still with me? It's okay. Rewind the video if you want to rewatch that part, or just keep trucking along. Whether you receive only one 1099 or multiple 1099s, the best tip I've got for you is to create a P&L. What's a P&L? A P&L is a profit and loss statement. Now, this can be very complex, but it also can be very simple. I like to keep mine pretty simple because the more simple you can make something, the more frequently you'll use it. Take the Apple iPhone as an example. It is quite complex under the surface, but it's so easy for people to use, they can even start a personal finance channel on YouTube with one. And you're gonna wanna update your P&L monthly. Or, for example, if you own a landscape business like my brother and you have to pay your employees weekly, then perhaps you'll wanna update your P&L weekly as well. Totally depends on your business. You won't be able to use your 1099 income until you have 2 years of self-employed tax returns. And along with those tax returns, your mortgage loan processor is going to ask you for a P&L for your business. So it's best to start now so you have time to prepare and create that and add to it each year instead of scrambling to do one at the last minute. As I mentioned, I like to keep mine simple and just use Excel. Here's an example I threw together real quick. I color code revenue in green at the top and itemize each revenue source. Expenses are noted in red, and don't forget to account for taxes, death, and taxes. Also, regarding 1099 income, here is what Form 1099 looks like for 2020. Link in the description below directly to this form from the IRS website. The other reason why I suggested starting with building out your P&L first is because, well, it takes money to make money, and because you're self-employed, you probably have some expenses that you're able to run through your business, which will allow you the opportunity to reduce your taxable income for your self-employed tax return. Additionally, once your P&L is updated and accurate, it will help you organize many of your tax return documents. So think of your P&L as a table of contents of sorts to help you organize your self-employed tax return, and simply start at the top with the revenue and you work your way down to help you organize your tax return documents. What I do each year is organize my tax return documents on my computer into a tax return folder, then subfolder for the year. Then I have other subfolders for income documentation, business or personal documentation, then any other miscellaneous documents that are unique to that year, such as forgivable PPP loans, EIDL, large purchase documents such as buying a home or vehicle. Again, the theme here is organization, and the more organized you are, the easier your life becomes at tax time for either you or your CPA. And you should be adding to these folders and subfolders throughout the year instead of trying to cram it all in at once during tax season, because that will totally stress you out. I'm sure you can relate. Hey, if you're getting value from this video, you could let me know by tapping that like button. Would love for you to subscribe as well. My goal for you is simply to help you feel more comfortable talking about money, and I usually post financial planning videos each week. What I like to hear from my CPA is that I've done most of the work for him and he fills in the blanks of some of the minor stuff that I may have missed. You don't have to be a CPA in order to have a good enough understanding of all of this, but you do at a minimum need to understand the big picture and a lot of the terminologies that you use about your taxes so that you could have a big boy or big girl conversation with your CPA without a lot of this floating over your head, or so that you're confident enough to do this on your own. As someone who's self-employed, if you're still not sure what you can deduct, then another great table of contents for you to use can be found on your Schedule C, specifically Part 2, Line 8 through 27B. Advertising, car and truck expenses, depreciation and Section 179 expense deduction, office expense, rent or lease, travel and meals, and you'll need some sort of documentation for each of these business expenses. So save your receipts. This form may get updated from time to time, but this is the section where you note your business expenses. And then line 31 will eventually flow through to your 1040 tax return document, as we mentioned earlier. Also, there is a link in the description below for 50% off your first 6 months of an online QuickBooks subscription, which will help you manage your cash flows, and they have a great mileage tracker system as well for all your business miles driven. Another tip, I mentioned earlier needing 2 years worth of tax returns and tax documents in order to qualify for something like a mortgage in order for you to buy a home. Well, I have a personal belief that I try to take every tax write-off and every tax deduction that is legally allowed and provided to me, regardless of how low that makes my taxable income amount look. However, the resulting impact of that to you and to me is that even if you had a decent year and you made good money, it will show and look like you made less money and less taxable income, which is what lenders look at when calculating your debt-to-income ratios for your mortgage loan qualifications. And that could hurt your ability to qualify for the home you want to buy. So there might be some years where you could take more deductions, but you decide to show more income so that you can more easily purchase the home and qualify for the mortgage. It's kind of like playing chess with your finances instead of checkers. eFile.com has a really nice checklist, so we'll go over some of the more popular documents that you might need. Starting with your taxable income forms, obviously you've got your W-2, that's pretty straightforward. You might receive a 1099 INT if you received any interest from, say, for example, a money market account or your savings account at your bank. You might also be getting a 1099 DIV if you are if for example, you have a non-retirement brokerage account, just a normal investment account that is not a qualified retirement account, and you are dripping your dividends to purchase more shares, you're still going to have to pay taxes on those dividends, even if you didn't realize them and take the cash. You'll still have to pay that. Obviously, you'll also have a 1099 miscellaneous for any 1099 income. If you did a rollover, you might have a 1099-R, or possibly if you took a distribution from your retirement accounts, that might show up as a 1099-R as well. Rental income and expenses. And then depending on how you structured your business, either as a partnership, an S-Corp, or some sort of trust, you possibly might have some K-1 distributions coming from that as well. Moving on to some of the tax deduction forms, you might have some medical expenses for the family. Obviously, keep track of your prescription medicines and drugs. You're going to want to keep track of your tax deductible miles traveled for both medical purposes and for business purposes. Your Form 1098, which will show your home mortgage interest that you paid. You're also going to want to hold on to your real estate tax documents for real estate taxes that you paid. Definitely hold on to your charitable cash contributions as well and document those. Also, keep track of the amount you paid to your CPA professional who helped you prepare your taxes for last year. You also might have some unreimbursed expenses related to your job, so go ahead and hold on to those as well. I mentioned the miles traveled related to your job already. Any investment expenses, any job hunting expenses, obviously keep track of your IRA contributions. That will probably be provided to you by your broker dealer who you have your IRA through. Any student loan interest paid to you, you should be getting some documents in the mail, and then moving expenses as well. Moving on to tax credits. Obviously, a lot of people know about the child tax credit. However, don't forget about the child and dependent care child tax credit in the event you did have some sort of child care expenses last year or every year. Any adoption expense information for the adoption credit, foreign taxes paid, and if you purchased a home for the first time, make sure that you hold on to that documentation as well for the first-time home buyer tax credit. And then some of the general information. Obviously, you're going to want to hold on to last year's tax return and compare that to this year. And then a lot of this stuff is pretty straightforward as well. Social security numbers, names of the dependents, their social security numbers. Certainly want to know what your prior year AGI was, and then whether you have a tax refund or you have to pay taxes. You're going to want your routing number and bank account number as well. See? I told you, jam-packed full of information. I really appreciate you taking the time to invest in your knowledge about your self-employed tax return. Here's that video right here down below about 10 tax deductions and tax credits. Would love for you to check that one out, or I don't know, you might like that one instead. If you have any questions for me, let me know in the comments down below. I appreciate your time. See you in the next one.